welcome. Good afternoon. You're watching Market Fatafat on ET now with me, Snehesha, and with me, as always, is Ankita Saxena. This is a show where we'll be taking you through all the big buzzes in today's trade and also give you some stocks that are looking good on the technical front, and we'll be doing all of this in under a minute. But before we do that, let's take a look at what the markets are up to. And well, it's a freaky Friday coming in for our markets, Ankita, because Nifty is 300 points lower from its day's highest point.
Absolutely, rightly pointed out. It's a freaky Friday. In fact, all the gains, all the recovery that we made yesterday, even that is given up, and you can see that coming in on the mid-cap front. You can see that on the pharma space. We'll talk about that. But like Sneh pointed out, Nifty, we have broken below the 22,900 psychological levels. It's a one-way decline. There is no buying coming in whatsoever. Look at Nifty Bank also, where the selling is much sharper. It's showing cuts of 1%. The broader market is bleeding right now. In fact, mid-cap, whatever gains we made yesterday has been reversed. Mid-cap is down almost 4% from the day's high. Small caps also down 3% or more. Market breadth is tilted in the favor of declines. It's a weak texture of the market in general, and sectorally also all the sectors are trading in the red. And like I mentioned, Nifty Pharma that had showed some resilience yesterday, shown some recovery, is declining away. In fact, heavy selling seen in Nifty Pharma, Aurobindo Pharma, Zydus Life, Biocon, Sun Pharma. All of these counters are trading with cuts of more than 3.5%. So Nifty Pharma is really taking it on the chin today. What's doing decent is just the FMCG pack, the defensive pack. That is just trading with cuts of 0.3%. And Nestle, Britannia, and Tata Consumers, that's doing well. That's trading in the green in the Nifty. So that's how the market is shaping up. A freaky Friday indeed, Snehi.
Well, absolutely. That's the only tinge of green we can see on the screen. It's coming in from these Nifty 50 FMCG names. But on that note, let's move on and welcome on board Arpit Beriwal, the Manager Derivatives Analyst, Equity Research at Motilal Oswal, who's joining us on the show for the technical check. And from our in-house team, we have Jinay joining us on the research front. Good afternoon to both you gentlemen. Thank you so much for joining us. Arpit, before I come to you, let me highlight a stock that's in focus today. Nifty 50 earning came in yesterday, and that's Hindalco. It came in post-market hours. Let's touch upon what the numbers were like. Largely in line is what quarter 3 has been for Hindalco. But higher alumina and aluminium prices have aided revenue growth. Copper business performance was better than estimates, and consolidated net debt, however, net debt was up 16% on a sequential basis. Remember, its subsidiary Novelis had reported weak set of numbers. EBITDA per ton was down 17% on a sequential basis, and the outlook that they had given was also very mixed. So that had also caused some pressure on Hindalco when Novelis had come out with its numbers last week. But let's take a look at what Hindalco's numbers look like on a standalone basis. Revenue has come in at 23,776 crores, which is an uptick of 7% sequentially. EBITDA, however, is slightly under pressure, 3% cut coming in on a sequential basis. Net profit has seen a whole slump of 23% on a sequential basis at 1463 crores. Margins also nominally under pressure, 11.2% compared to 12.3% on a sequential basis. Let's understand what brokerages are making of these numbers. CLSA has maintained their outperform rating, target price of 800 rupees per share. On Hindalco, they're saying results are largely in line. The coal block has also now been secured. JP Morgan has maintained an overweight with a target price of 670 rupees. So that's what Hindalco's quarter 3 looked like, and the brokerage take, that stock is down almost 1% in trade as we speak.
All right, that's done. That's Hindalco on the back of that news flow. But coming to you for the charts, picked out Bajaj Finance for us. Arpit, tell us what you see on the charts for this counter. In the last 6 months, it has done pretty well for itself. In this market also. It's looking strong at 29% gains coming in from Bajaj Finance. Tell us, where do you see this headed from now?
Yeah, very good afternoon, everyone. So if you see overall, currently the market setup has been in huge bearish trend. But if you see selective pockets has been outperformed, especially from the large cap. And if we talk about Bajaj Finance from the NBFC space, this counter has shown relatively outperformance in last almost 3 to 4 months, where we have seen broad-based selling across major sectors. So technically, if we talk about Bajaj Finance on the monthly scale, from last 3 years, it was trading in a range between 6,600 to 8,200 from last almost 3 years. So last month it has given a range breakout above 8,050 levels with noticeable volume from a strong bullish candle. And if we see the weekly setup also, the structure is quite strong. However, if we see on the daily scale, some dip was seen from the higher levels, but again the recovery was seen from lower levels, and it has retested its previous breakout zone on the weekly scale trading above short-term moving averages, and in spite of market carnage that we have seen across the broader market and the index level, the stock is trading at life-high territory. So within the NBFC space, if you see relative outperformance is likely to continue, and Bajaj Finance will be a top pick within the NBFC space, being a large cap. Along with that, range breakout on the monthly scale that definitely augurs well for the long-term trading and long-term investment. So Bajaj Finance would be a top pick within the NBFC space. One can go long in between 8,250 to 8,300 levels, with keeping stop loss of 8,050 for an upside move towards 8,700 levels.
Okay, so that's the outlook coming in on that stock. Let's move on. And Jinay, coming to you, Deepak Nitrite is the stock that you've picked out for us. It's an earnings candidate, but that stock is deeply under pressure today. 15% cut coming in. Tell us what the numbers were like for this company.
Well, it's a weak set of numbers for Deepak Nitrite. If you look at the overall revenue that came in at 1903 crore this quarter versus 2032 crores last quarter, sequentially a downtick of about 6.3%. However, if you look at the overall net profit, that tanked about 49.5% sequentially, coming in at 98 crores versus 194 crores. And operationally as well, a weak set of numbers. EBITDA was down about 43.5% sequentially, whereas the margins contracted more than 500 basis points, 580 points to be precise, sequentially, coming in at 8.8% versus 14.6%. Now, the management reported that the earnings were mainly impacted due to deferred demand, elevated raw material prices, and oversupply coming in from China. Apart from that, for Q4, the management has said they remain cautiously optimistic from here on.
Right, that's Deepak Nitrite down and out in trade today, trading with cuts of over 15% on the back of a poor set of quarter 3 results. But coming to you, Arpit, you picked out SRF for us. Tell us what is it that you're penciling in on the charts for this particular counter? I mean, if I look at the charts, in fact, today also it's declining almost 3.4% in trade. It hasn't really, in the last 1 month, it has moved 8 to 9 odd percent. But from here on, where do you see this counter headed? It's not a very good day for SRF today.
Yeah, so if we talk from the chemical and the fertilizer space, if we see SRF chart, if I look at the monthly setup for almost last 3 years, from Jan 2022 to Jan 25, the stock was in a broader range between 2200 to 2650 levels. So last 3 years consolidation was seen. However, in last 3 to 4 weeks, good consolidation breakout was seen on the monthly scale above 2650 levels, and we have seen a good rally towards 3000 levels. However, in the last couple of days, due to market weakness in the broader market, we have seen some cool off from the higher levels, from 3000 to 2700 back to its resistance zone. But if we see the monthly setup wise, 2600, that was the initial hurdle zone, likely to be a major support zone going forward with a view of 2 to 3 months perspective. So whenever the market takes a breather and some recovery will be seen in the broader market, SRF is likely to outperform it. So overall support is intact at 2600 levels. So one can go long at dip near 2680, 2700 levels, with keeping stop loss at 2550 for an upside move towards 2850 and then 3000. So that would be a top pick within this space.
Alright, moving on then, another counter that is really down and out in trade today, then that is Manappuram Finance. That stock is down 10%. In morning it was down about 10 odd percent, after it declared its quarter 3 results. This was in quarter 3 FY25. Manappuram Finance reported a consolidated net profit of 282 crore rupees. That dipped more than half, over on a year-on-year basis, from 572 crores in the same period last year. Now, the company's net interest income, or NII, also experienced a year-on-year growth of 13%, rising to 2,516 crores from 214 crores in quarter 3 of FY24. The impact on profit was at its microfinance arm's problematic loans, and provisioning increased fourfold to 473 crore rupees. Now, if you look at the brokerages and what the brokerages had to say, well, Jefferies has, though maintained a hold rating on it, said that Manappuram Finance quarter 3 FY25's net profit fell 52% on a year-on-year basis, below their estimates, and also their net interest income was softer on the back of higher provisions. Now, the AUM growth missed their earlier estimates, and the net interest margins, or the NIMs, missed the estimates, falling sequentially, and the credit cost jumped sequentially owing to the stress in the MFI book. So that's the word coming in from the brokerage on the back of negative, a bad set of results coming in from Manappuram Finance. That stock is down 10%.
Okay, so that's the lowdown on Manappuram Finance. Weak set of numbers. We interacted with the management also. They're hopeful of their guidance going ahead, especially on the loan growth, gold loan growth front. But let's move on then on the programming note. Then Mahakumbh is not just a religious gathering. It is a confluence of culture, faith, and now financial awareness. The Association of Mutual Funds in India, which is AMFI, has taken an innovative step to educate people about mutual funds. Let's have a look at this exclusive report.
The Mahakumbh, a sacred event that draws millions of pilgrims, has now become a platform for financial empowerment. Along with spiritual enlightenment, AMFI, the Association of Mutual Funds in India, is educating the attendees about the value of investing and securing their future. One of the key attractions are the AMFI knowledge buses. These buses are stationed in high footfall areas, offering visitors educational videos, quizzes, and even a place to charge their phones and rest, all the while learning about the benefits of mutual fund investments. Another noteworthy project is the Kalash installation, a water tank that conveys messages about the value of systematic investment plans, in addition to offering filtered drinking water, both warm and cold. The meaning of the Kalash, which stands for wealth and well-being, is exactly in line with the principles of wise investing. Additionally, AMFI is offering branded blankets to pilgrims residing in camps. These blankets are giving warmth to devotees and also conveying the message of wealth accumulation and financial planning. AMFI is successfully introducing financial literacy at one of the world's largest human gatherings with such thoughtful and engaging initiatives.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus today, and a couple of stocks now from the telecom space I wish to highlight. Bharti Airtel and Vodafone Idea are in focus. India's Supreme Court has delivered a major setback to telecom companies like Vodafone Idea and Bharti Airtel, which were hoping for a reduction in their statutory dues. Now, the Supreme Court has dismissed a set of review petitions filed by telecom companies seeking to overturn its 2021 order, which had refused to allow corrections of errors or unintended additions in the telecom department's calculation of the adjusted gross revenue, which is the AGR dues. Now, with this decision, they have no further legal options. They cannot go ahead and overturn it once again. So it's a big setback coming in for Bharti Airtel and Vodafone Idea. But other than this, while both of the stocks are under pressure and Vodafone Idea is down about more than 5.5%, you have Bharti Airtel that was in the green and has now flipped over to the red on the back of this news flow. But earlier, Bharti Airtel was holding up very well in today's trade on the back of a Citi note coming in, wherein it had maintained a buy rating, target price of 1,920 rupees per share, and the company reiterated its immediate target to reach an ARPU of 300 rupees. And they also believe, Citi also believes that the company is driven by a combination of further tariff, repair, and customer upgrades from 2G to 4G. And these combinations also include prepaid to postpaid, data monetization, international roaming, and switching to bundle offerings. Bharti also plans to utilize its rising FCF for both deleveraging and to increase its payouts to shareholders. And lastly, the capex intensity is also likely to go down further in FY26. This is what was making Citi bullish on Bharti Airtel. They maintained a buy rating, target price of 1920, but nonetheless, this news has weighed over the positive brokerage note, and Bharti Airtel has also tipped over to the red, although nominally.
Alright, that's Bharti Airtel and Vodafone Idea in focus today. But coming to you, Janay, your figure and earnings candidate, Titagarh Rail Systems. Tell us, what are you seeing? What does the report card look like for Titagarh?
Well, as overall report card, if you look at all the metrics, that was a downtick. If you look at the overall revenue, that came in at 902 crores versus 955 crores, so a downtick of about 5.5% year-on-year basis. But however, if you look at net profit, that was down in mid-terms, down 16% year-on-year basis, coming in at 63 crores versus 75 crores. And operationally as well, the EBITDA was down 9.6%, whereas the margins that came in at 11.1% versus 11.6%, so a slight cut of 50 basis point year-on-year basis. But apart from that, if you look at the overall segmental revenues, the main segment that dragged the revenue was the freight segment, which dragged the revenue, which remained under pressure, and the margins also remained under pressure in that segment particularly. And if you look at the overall share price, currently it's trading down about 5.6%.
Okay, Jinay, thanks so much for sharing with us the reason why Hita Gareda is in focus. But on that note, we're completely timed out on this edition of Market Fatafat when it comes to stocks. Jinay and Arpit, thank you so much for joining us. But as we bid you goodbye on this edition of the show, the India Energy Week 2025 has reached its last day today. The third edition of this premier event being held in Yashobhumi Dwarka, which is in New Delhi, has many attractions at the core of which is its exhibition hall. Yesterday, the Minister for Petroleum and Natural Gas, Hardeep Singh Puri, visited the BPCL pavilion to witness firsthand the company's latest innovations in energy transition and sustainability. And accompanied by industry leaders and experts, Minister Puri explored BPCL's groundbreaking advancements. As the minister engaged with BPCL representatives, discussions revolved around the company's strategic roadmap to drive sustainable solutions for their retail business along with achieving net zero emissions. With companies like BPCL leading the charge, India's journey toward a cleaner, greener future continues to gain momentum.
All right. All right, with that, it's time for us to wrap it up. Snehi and I will take your leave, but don't go anywhere because market action continues on ET Now.